I'm Charlotte McLeod with the Investing News Network, and here today with me is Chris Marcus, founder of Arcadia Economics and author of the book, The Big Silver Short. Thank you so much for being here online with me once again.
Charlotte, great to be back with you. Always fun talking silver, and thanks again for having me on your show.
Yeah, I'm really excited to have you back on. We haven't had a chance to catch up for a little bit. Now we're almost at the end of 2021, so I wanted to bring you back on to get a sense of how the year has been for silver. The year started with quite a bit of momentum. We've kind of seen it drop off. So kind of a broad question to start off. What are the headwinds we've seen silver face as we've gone through 2021?
Well, it's, in hindsight, turned out to be a rather historic year. We saw that silver squeeze first week of February. And it's interesting because a lot of silver was purchased, even the LBMA banks, which includes Goldman Sachs, JP Morgan, they put out a report saying that there was so much silver purchased in those first 3 days that fears emerged that they were going to run out, that they thought the whole system was on the ropes. That was confirmed by the commissioner of the CFTC, Ralston Benham. So I think even, Charlotte, I believe, were you one of the people that talked with Ed Moy of the U.S. Mint, I think, that, I know there was a couple, was that one of your interviews as well?
Yes, I did do one with him.
And I mean, I was shocked when I heard him say that this is the guy who ran the U.S. Mint, and you asked him, and also I think someone from Kitco asked him if there was enough silver to back all of those claims. He said no, and I mean, I think he would be in position to have the credence to say that. So we had this distortion earlier in the year, and then it came down because we saw a lot of paper dumped on the market. That's a lot of the research that I've done, others in the silver sphere, finding the changes in the SLV's prospectus, finding flat-out felonies that were committed on CNBC by Jeff Curry, chief of commodities of Goldman Sachs. The evidence is there. I've submitted 3 rounds of evidence to the CFTC. They refused to comment on it. I read it up in 10 days after it happened in early February. Yet despite fining JP Morgan almost $1 billion last year, they let it continue to go on, which has created an interesting market because, yes, the paper silver prices come down, but anyone who's buying physical silver has seen those premiums increase. And interestingly, in the last week or two, they have spiked again. And now as we sit here the Friday after Thanksgiving, where all of a sudden there's headlines of a new mutant form of COVID variant that governments that often don't have answers to questions that the markets are asking or saying. And what happened the last time this was shut down? Remember, silver went down to $12. There's a lot of pressure there. And again, you see silver selling off again today. I think we're getting very close to the divergence on a wider scale between the paper and physical. And we can dig more into the details of any of that. But a lot happening beneath the surface this year that maybe we'll see towards the end of this year or in 2022, but I think this is coming to a head sooner than later.
Yeah, and these are exactly the kind of things that I was hoping that you would touch on. You know, we did have the silver squeeze at the beginning of the year. I know you cover market manipulation extensively on your YouTube channel. I think that people really felt toward the beginning of 2021 that this situation was coming to a head. So why do you think that it kind of dropped off a little bit? And as you said, now maybe it's sooner rather than later. Why do you think that's the case?
Well, unfortunately, it took a series of felonies, and I'm not saying that lightly. You have fraudulent statements made on CNBC and Bloomberg by Jeff Curry, the chief of commodities of Goldman Sachs. Then we caught Ralston Benham, the acting chairman of the CFTC, just renominated by Joe Biden, who confirmed very clearly. Now, he didn't say that to the public. He didn't say it to the market, but he went to the futures conference in Boca Raton and talked about how they used the features, the margins, the futures market setup, all these policies that we find out were actually voted on by Goldman Sachs and JP Morgan to tamp down the price of silver to prevent, in his words, what could have been a much worse situation. Which sounds bizarre because he's supposed to be regulating a free and fair market. What does he care? The LBMA's report detailed how much silver was purchased, so the price should go up. Why was he scared? What was the catastrophe? Are there other times when they've tamped the price down? My background includes 11 years on Wall Street, an MBA from Morton, 7 years running an equity options specialist post on the New York Stock Exchange for market maker firm Susquehanna. So I didn't just read about this on the internet. I've never heard of any regulator in history saying something like that. I've never even heard anyone come close to saying something like that with anybody describing it as anything other than price fixing. This is like the SEC of the commodities markets. And he even later says that all these things really avoided much worse situation, and that's why they were able to control, he actually said, control the price and volatility of the silver contracts. This is a guy who's regulating it, and you can also go on their same CFTC YouTube channel, and you can see when they have meetings, and Goldman Sachs is voting on it, Citadel's voting on it, even JP Morgan, that the CFTC fined $920 million last year for spoofing these same markets on not a couple of times, on hundreds of thousands of occasions, and they're getting JP Morgan's vote to set the policy. And then we see so much metal purchased, physical, according to iShares' own data that's sponsored by BlackRock. The custodian is JP Morgan. So the guy that got caught the year earlier, when I called asking for the audit on February 5th, 4 days after this happened, I said, well, who counts whether the metal's actually put into the trust or not? The representative says JP Morgan. I said, well, does that seem like a conflict of interest? But they can't comment on that. I posted another audio of the call I made to iShares, who I've called several times. And I might add, never did they mention the prospectus changes to the iShares Trust on February 3rd to specifically protect everyone associated with that trust against a short squeeze, which doesn't sound good when you then review Jeff Curry of Goldman Sachs on Bloomberg February 2nd, and then on February 4th, where you see the tickers in the background. And as someone who's worked on a trading floor and knows where there's a lot of stuff going on, your subconscious doesn't need to hear the words. You look, oh, silver's getting hammered again. Here's this guy lying about how it's impossible to create a short squeeze because of position limits. And I might add, I detailed many times how Goldman Sachs routinely violates those position limits. I called the CME to ask, hey, there's this position limit you put out. Here's JP Morgan and Goldman Sachs routinely violating it. What's going on there? They say, well, they either have an exemption or they're in violation. Well, I say, which is it? They tell me the CFTC is regulating it. And this is the CFTC run by Ralston Benham, who almost brags about being transparent. And yet he said he opened an investigation into the silver manipulation on February 1st and kind of threatened people on social media. Yet despite them having the evidence, so it's an unusual dynamic where you start to realize it is a rigged game. And whether some people want to acknowledge it or not, I mean, if anyone wants to, I've yet to hear a counter offer to that evidence. I've called every extension at the CFTC. The media director made promises to get back to me, and I'll be releasing a report on how that one went. So, I mean, I know it's a bit shocking for people to hear, and some have been aware of this for a long time. When Bart Chilton, the former CFTC commissioner, detailed it quite clearly. Some, it's still a little too shocking to believe. Sometimes I can't believe this is what I'm finding, but it's when you have, that's why you have all this metal purchase, but the price goes down and people are wondering this doesn't add up. This seems like something is broken, very similar to the end of the Big Short, where the mortgage bonds were defaulting, but because Goldman Sachs set the market on the bonds they created, so just insert, instead of mortgages defaulting, the paper silver market is already defaulted, but right now in that COMEX or SLV spectrum where the prices are still unfortunately set, it's not being priced in, but we'll see how much longer they can keep that one together for.
Yeah, for sure. So thank you for that explanation. I think that amid all of these things that you track very closely that people might be less aware of, there's things going on that people are, of course, more aware of, which is the Federal Reserve's plans for 2022, including finishing tapering, perhaps starting hiking interest rates. Can you comment on that, maybe the feasibility of those plans and how that affects silver and the precious metals in general?
Sure, that's actually a great question because I know back August, September, you start seeing these headlines appear almost out of left field. First, the Wall Street Journal, then CNBC, and then quoting Goldman Sachs, oh, the Fed's going to start tapering, they're going to raise interest rates. Now we're in an environment where they can't go a day without juicing the repo rates with a couple $1 trillion, or else the whole thing collapses. And if you think that doesn't make an impact, look at the price of Tesla from September of 2019 to now, right when those swap lines started. If anyone is confused on the impact of printed money, I'm sorry. Can you remind me of the question again there?
Okay, so looking at Federal Reserve's plans in
Yeah.
2022, yeah.
So most people didn't believe when they said that they were going to taper, and in fact, for a long time, I didn't believe that was possible unless you accept at least the possibility that the reset has already been planned long ago and has been rolled out, or that, or some variant, a mutant variant, for example, for whatever reason, they've decided to let it crash because it's basic math that if you start letting these rates go up, this is a whole credit market dependent on cheap, easy credit. So we found out later since then that some of the Fed governors have a lot of questions about whether they've been front running their own policy. Elizabeth Warren supposedly investigating. There's been a lot of evidence. I read about it. I see it on Zero Hedge. It's discussed many places. There's also a lot of question of whether Jerome Powell was making highly inappropriate trades, which other people seem to be providing a lot of evidence of. I have not seen his personal statements. So it's almost like these guys knew what was coming. To me, it feels like somebody has decided to pull the plug. Here we are the day after Thanksgiving. The thing's down 1,000 points. Now there's at least reports of a new mutant variant. I'll leave my comments on that aside, but just looking back to what happened last time things got shut down, because the media was saying that was last March, and we remember how the markets reacted then. So you have two outcomes I see. One where either they keep printing until the dollar is worthless, which if you knew the real numbers, I think has already happened. B, raising interest rates, or maybe there's some combination. This thing has to be reset eventually. I believe that's taking place now. And that's the only way that you can actually raise interest rates in this type of environment if you know that you're going to wipe out the debt, whatever the specifics or name that they end up calling it.
Okay, so you've given us a pretty good idea of what's going on in silver. I want to ask you about how sentiment is feeling in this space. I know you recently had your Silverfest event wrap up. It was the second annual one of those. How are people feeling? What themes emerged from that you can talk about?
Well, I think there's some that realize what's going on, and when the price is lower, they're buying shares or buying options or buying silver, and kind of more in the trader camp where if you can accept what is, all right, well, maybe I don't think this move is right, but I'll trade accordingly. Then there's a lot of people that are still understandably frustrated by seeing the price get hammered. I think they made a bet that was very intelligent. I think they got cheated. I think they're continuing to get cheated. I described why the people who are involved, I mean, on all levels. But at least that's why I left Wall Street and do what I do, to at least point it out in any way possible to people who want the information or what I've seen or what I've found. On the other hand, I do what I can. That's why I petition these regulators, make the videos publicly, explain it to anyone that I can, because I mean, even aside from, I mean, have a background as a trader, so that part's fun. But it gets tough living in a world where you see just such a high level of corruption, and I think that's the part that's difficult for many to take. I think even the seasoned gold and silver guys are kind of beaten up, where it's almost like it's hard for them to like get their hopes up to imagine that it could be coming to an end again, and I can understand that. But I think that's the thing when a marketplace is the summation of all those different views, all those different opinions. Right now, it includes that the banks can hammer down any paper contracts as many as they want. But that's why I didn't wasn't like I set out wanting to follow the politics or that side of it. But to me, they're very closely interrelated, and maybe silver doesn't go until some of these governmental schemes are more fully exposed. But okay, if you tell me they go at the same time and that's sometime in the next month or two, that certainly is a possibility that I factor in highly.
Okay, and as we look a little bit at investor angle, I wanted to ask you also about the silver stocks. So we know we have the price lower now than it was at the start of the year. I wondered if you could speak about silver companies, how they performed financially in terms of production, and how that may contrast with what their share prices are doing this past year.
Yeah, well, it's a challenging environment. I mean, any business where you never know any of your prices or input costs, especially the way it fluctuates seemingly counterintuitively on the COMEX. A lot of the companies obviously at $28, $29 silver. The producers were doing better. For the explorers or the smaller companies, easier to raise capital at the higher price. When the price goes down, the shares definitely get hammered as they are today. And I guess after a decade of studying silver and then starting to learn more about the silver miners, I still consider myself a novice at that compared to some of the other true silver mining stock experts. But one of the things that I've noticed that happens is that when the price comes down, all right, if someone was like they needed that high price to stay in business, you have more risk and those will get washed out. The ones that remain, if someone's figured out how to keep a silver company running through this environment, usually that's a good sign. It's the stronger ones. A lot of these companies over the past decade have had to either become more efficient or really tighten up their balance sheet. So, and that's one of the things that's fun about investing or trading. There's a whole different spectrum. If you think silver is going to go up, to $50 by the end of the year, then, someone that might be on the verge of going out of business, they'll get a higher rate of return. There's a higher degree of risk. Fortunately, I don't think you have to take that. I mean, if you look at some of the companies that have navigated this, there's Keith Neumeyer, First Majestic, obviously, that many people know about, and he's been through a whole bunch of price environments. I think that we're closer to a much easier environment for everyone, but hey, is it possible that, something wacky happens? So I would just suggest balancing that in. I mean, I think it's very early. I mean, if we get $50 silver at some point, I can't even imagine how much money is going to be flowing into some of these silver stocks. We got a glimpse of that earlier this year and at points in the past couple of years. But I would suggest that people make sure that if you get into the silver stocks, that there are different risks. Make sure that you're discussing that with whoever is the right person in your life to make sure that it's matching what is suitable for you.
Okay, now looking forward to 2022, what are the elements in the silver market that you're going to be watching the most closely? I know there's so much at play. What are you going to have your eye on really, really the most closely?
Well, I'm actually pretty excited to see how the December deliveries play out. We have another day or two to go before we find out how many contracts are going to be delivered. It could be nothing, or maybe it makes a dent. So seeing physical metal removed, we've seen glimpses of that. Keeping an eye on premiums, which have spiked recently. And I guess to me, I see the whole COVID thing a bit interrelated. I mean, the same banks finance the same companies. We don't need to get into all that today, but I mean, for example, if there's a bunch more shutdown and next week there's 10 more countries shutting down each day, and then a week later it's the same thing. Well, and then I see silver go down to $20 or $15. To me, I would think, well, we're probably likely to see some sort of rebound where it shot straight back up to 30 last time, although would probably go higher. I don't think that we'll see $15 or $20 silver, but I think that's, if you want silver and want to just leave it in your closet, you don't care, leave it there. But if people are trading silver, as much as I wish I could say, it's going to go nice standard normal distribution, you almost, if you be prepared for that type of thing to happen, or else it might not be the right place to invest. I mean, the reason I've stayed in it, I think that you're going to have a broken COMEX, which is going to have a moonshot at silver at some point. So I'm investing because I traded options. I traded volatility, and I have the background and the willingness to handle that. Now, for many people, if that's throwing you or off in the morning when you see the price down, or you're not able to sleep at night, then you're probably doing something too big. But with that said, I mean, to me, the reward or potential reward justifies it. If silver is still around $25 by the end of next year, I'll be stunned. And perhaps one specific marker to look for, I think you will see the powers that be do anything within their power to keep silver below 30. If you see silver above 30 for a couple of days, so you see silver above 30 on a Thursday and then goes up to 31 or 32 on Friday, and on Monday it's still in the 30s, I would imagine at that point it may as well be 50, because when I think of the dynamics of the marketplace, when you have, this is essentially the inverse of the mortgage bubble. It's going to have to go at some point. It came close to going in 1980. It was close again in 2011. Was probably even closer at $30 silver, amazingly enough, in February of this year. But when you think of all the money that's flowed in, plus what will be coming, okay, now if they're shutting down for COVID, when's the Fed going to start their next easing program? That'll probably be before the end of the year. So I think it's whether people like it or not, it's going to be suppressed. But once it goes through that break point, you'll know it when you see it. And I don't think it's going to take that.
Interesting and fairly optimistic place to leave things. But I want to ask before I let you go, if you could let people know where they can find you if you want to learn more, and if you had anything else that you wanted to leave the audience with about silver.
Sure. Well, thanks again for having me on here. It's always fun talking silver with you, Charlotte. Wish we could see you in one of these shows in person one of these days again. But until then, you can find me at arcadiaeconomics.com. The YouTube show is on the website there, also on YouTube, Arcadia Economics. I did write a book called The Big Silver Short, where we dug into all this, the specifics between how I saw this back in 2011, what's happened since then, why I think it's even, I mean, either I'm massively right or massively wrong. And if I'm massively right, I guess closer now than in 2011. But I keep people up to date with that. We're also doing a lot of fun projects. Like you mentioned, we did Silver Fest, which, there's the panels and the stuff like that and giving away silver, but more so to get people connected, because I know many feel like the lone wolf, or there's no one to discuss this with. So we've been taking a lot of the ideas that you see in like poker, online gaming, and creating at Silverfest. We had the video forum so that people can actually meet each other, get together, discuss ideas. I'm working on we're starting to mint our own products, basically design an alternate to the COMEX so that people, I mean, I'm in Mexico where I'll bet I can get silver probably even cheaper than the COMEX price, because these guys were doing silver before that darn COMEX was even invented. So if anyone is looking to let go of the frustration of what was, which certainly I can understand, but if you're interested in finding solutions so that we don't need to be beholden to this type of system anymore based around money that comes out of a black box that no one answers questions about, you can find me at arcadiaeconomics.com.
Perfect. Well, thank you so much. Always great to have you on to talk. Yeah, it's really great speaking with you.
Well, thanks so much, Charlotte. Look forward to catching up with you again soon.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Chris Marcus with Arcadia Economics.